And we mentioned under those conditions, the dollar and safe haven assets would likely strengthen. You can see that right here. And we said risk appetite would likely fade and crypto would likely struggle to sustain current support levels. Alrighty, so before I do the fundamental backdrop and I talk through MNQ trades today and I talk through the total cryptocurrency market cap, I want to first acknowledge Scalper, Aqua, and myself. This week alone, the three mentors that you guys have in this community collectively cleared over $200,000 trading the markets, and it's only January 8th. We didn't do this off of hype. We didn't do this off of luck. And we definitely don't do any of these things off of hope in this community. This came from discipline, well-defined strategies, and precise entry and risk management, which is the same thing that most retail traders ignore while they hope the market goes their way. The hard truth is that hope is not a strategy and prayer is not risk management. And emotion is the fastest way to stay average. And so I really want to just kind of bring you guys back down to a reality of what's possible when you focus your attention on confluences, regardless if you're using Scalper's order flow or the CYPRX 2.0, and making sure that you're not allowing your emotions to get the best of you when you're participating in these markets. So I want to pass the floor over to Aqua real fast, considering that we've all been tracking his journey over the past couple of months since he's been on this trading journey. And again, highlighting some of the key milestones that he's achieved. He has now yet again achieved another key milestone, which is for the first time ever pulling profits from this market as a successful day trader. So I'll let Aqua share his screen real quick. Maybe you can go over your trade breakdown real fast and show people that you've just become eligible for your very first payout since becoming a profitable trader, which is just phenomenal. I want to give you a personal round of applause in achieving such milestones. I'll give the floor to you, bro. Maybe give the people a little bit of a motivational lock-in, considering also yesterday you talked about how you took an L, and you were able to control that emotional behavior of trying to revenge trade and try to enter back into the market to rekindle that loss. And instead, you just said, hey, look, $150 is my max loss for the day. I took that L yesterday and I'll come back and revisit the charts again today. You came back today and you made over $800 in your trade position today, and now you're eligible for a withdrawal, which is just so phenomenal to see that you could still take L's in this market and recoup from them and rekindle from them and still come out on top. So the floor is yours real quick, brother. Before I do the entire breakdown and analysis, we'll go over the fundamentals from the beginning of this week, what's taking place on the retail side of things, why the market's down. We'll talk about MNQ, and then we'll go over some of the data that came out today and just really dive into it, looking at the headlines, picking apart the actual data, what the data is telling us about rate cuts, and then what to be paying attention to tomorrow. So the floor is yours, bro.
Yeah, so this has been one hell of a journey, and I just get more and more excited every single day. Even when I'm taking an L, like yesterday, I knew I needed to stop at my $150 threshold, and I knew that my mistake was literally just my mistake. Like I could have ended the day green yesterday, but part of me got greedy and wanted to double and at least leave the markets with 500, but I was at like 250 or 280 or something like that. Um, and then I took that L and I was like, you know what? It's all good. I'm just gonna walk away because I know where this can go if I let my emotions get the best of me, right? And I know what I'm capable of now as well with the edge that I've learned from the CyberX Superior Trading course, right? So just having that confidence that like, you know what, tomorrow there's going to be some more setups. Like I don't need to rekindle this today. I can come back tomorrow and it's a new day, right? So that's exactly what I did. And let me share my screen here. So today I took two trades. I took a short, um, and then I took a long. And yeah, that was the bulk of my trades today here. Let me see if I can blow up my screen here for you guys because I know you guys can't see it. So this was the short that I caught. I had recognized that the market was just completely falling, and when this candle was coming down and it it broke the structure of all of this over here, I got in on this pullback, and I know that like right around the 630 mark too, the market likes to move like really, really, really fast. So I caught the end of this wave. It was really, really quick. I was in and out, I want to say within like 2 minutes, right? That was a nice trade. And then I just sat on my hands just to just kind of see where the market is going. Especially MNQ, it likes to just really roar from like 6:30 to 7:30. So I wanted to just see where the dust was going to settle. And sure enough, just sitting on my hands and waiting for my next trade, I had seen this break of structure. This is like pretty much the 2.0 what is it, pattern, right? So you have the break of structure, engulfing candles, all of this, and then I got in on this pullback, and it's a nice little scalp, right? Got in and out of the market too. And that was my second trade for the day. I was eyeballing these other lows though as well from past sessions. So that's why you see London low, Asian low, and then the old New York low as well that I had come over here and just pulled over just to kind of see what lows that we had visited, right? Just to kind of see where the market could end up because I thought too potentially it can come all the way down here to this old London low from a while back as well. But it looks like we're just kind of going sideways now. So, done for the day. But these for whatever reason, ever since Cyprus has pointed it out, I've always looked at other areas of interest from past sessions, and they always retest it and revisit it. So, shout out to that confluence from Cyprus as well, right? But let's jump into my payout that Cyprus just like. I had no idea I even had a payout, and he was like, "Yo, where's your account at?" And I was like, um, 3,800 bucks. He was like, go to your payout section. And then boom, I came to my payout section, and this is the eligible amount that I could request to basically pay myself out today if I wanted. I may do it. I don't know. I'm gonna circle the block again and have a conversation with Cypress again. I don't know if I should maybe just pull this just to make it feel real, or if I should finish out the week, finish out the month. But yeah, we are here, got an eligible amount that I can take out. And to be honest with you, I, this is like, I was not thinking about the money at all. I was just thinking about just just polishing myself and sharpening myself every single day, whether it was my TA or my discipline or my psychology. And this is a surprise. Like I was not look like I had no idea that this was coming this month. So super excited to keep going and keep grinding with you guys. But yeah, that's pretty much it for me. Today's
Bro,
trading session,
you
bro.
couldn't have said it any better. I did not think about the money. Say that shit again. Everybody that is trading these markets, go and fucking look yourself in the mirror and say it is not about the money. It is about refinement. It's about discipline. It's about risk management. It's about making sure that before you enter into the markets, you have confluences that make sense as to the directional bias that you're telling yourself in the moment. And stop thinking about the money. When you think about the money, I'm telling you guys, the market somehow fucking knows and it robs you. And then because it robs you, you feel emotionally attached to that outcome and it just deteriorates your whole entire flow. It literally crushes you. And if you allow that to happen, then you're just going to get stuck in this feedback loop of chasing outcomes that never go in your favor because the market doesn't give a fuck about the fact that you want money. It could care less. When you come in and you apply discipline, you apply the things that myself and Scalper are teaching you in a neutral fashion where you're not biased about the market being bullish or bearish and you're able to react under the changing market conditions, then the market will pay you, right? So I will say this though, remember that anytime you do take a payout, It obviously, of course, reflects in your overall balance. And because now you are on a live account, it is a static drawdown rule. So whenever you take that money out, that's then going to be your new balance the next time that you come into the market. So what I would say is just keep working on building your cushion. Maybe make your risk parameters a little bit smaller so that way you're building that cushion of maybe like $5,000. You're almost close to that. So that way, when you do pull profit, you still have a good cushion when you come back and trade the next week, and it's not close to your max drawdown limit. So I think Tez said it in the chat, right? You're eligible for $1,900. Pull 500 just to say that you did it, that you know it works, that the deposit hits the bank account and gives you that dopamine fix. I mean, we all know that you don't need the money right now, so there's no real reason to pull the max amount to give yourself that cushion to move forward into the remaining portions of the rest of January. And then maybe take a bigger payout the next time that you're eligible in the next 5 trading days, right? Just so that way your cushion keeps building. But yeah, man, congratulations. You couldn't have said it any better. You keep saying things that just show that you deserve the results that you are achieving. It's that you're not focused on the money, you're focused on refinement. Yesterday, when you took a L, you didn't revenge trade. You got it from your computer. You understood your maximum loss for the day, and you didn't want to try to rekindle that. Usually, what happens when people do that is they come back thinking that they're going to make a decision valid enough in the market to make the money back that they just lost, and then they just keep losing more money, and then that just keeps leading to more inaccurate decision making in the market, and then you get even more emotional, and it just turns into a fucking super blown red day.
Hmm.
And you've shown that that can be avoided by literally just disciplining yourself, which is why I stress the importance of psychology over technical analysis or psychology over fundamentals, because you can understand order flow. You can look at the order flow charts and Uzi can fucking give you all the buy and sell this, and that you want. But if you don't have the discipline enough to actually apply that information, and when the information doesn't work in your favor in the moment, really zoom out and see what you're doing wrong, then it doesn't matter. Technical analysis goes out the window at that point because you don't have the discipline to back it. So, yeah, man, congratulations. I keep highlighting and I'll continue to highlight anybody that's successful in this community. Coming up, we have a couple of interviews pending. There's a couple of people who, in the process with the scheduling some calls with, who have recently passed challenges that we'll have some interviews with in the coming days ahead. But yeah, man, keep grinding. Everybody else that's on this journey, I can't stress enough that if you're not where Aqua is or where myself is or where Scalper is yet or Max is or some other profitable people in this community are, don't give up and don't allow our progress or lack thereof to motivate or demotivate you. Like just focus on refinement. Focus on waking up in the morning and applying yourself and really making sure that everything outside of your life is aligned with what you're doing in the markets, right? If you are trying to sit at your computer in the morning and you're about to place a trade and you're like thinking, today I'm going to pass my challenge, right? Today I'm going to make enough money to pass my challenge. You're not in the right headspace. Even though saying that to yourself sounds like something that would be something that you need to say to yourself, what are you focused on at that point? The money, right? You're focused on the money. And it's hard to admit that, but it's the truth. And when you're focused on the money, 9 times out of 10, it usually doesn't work out in your favor because there's something along the lines that you could have been paying attention to that you didn't because you were too focused on the money. The money will come once the discipline comes, the ability to apply the technical analysis strategy properly. Once you have the ability to identify the confluences, pull the trigger with confidence and minimize your risk, which then allows you to maximize your reward, right? So kudos to you, Aqua, bro. Can't stress enough. It's been a blessing to see that phone call that we had a couple of months ago where I was like, bro, you need to lock the fuck in. And you were like, you know what? You're right. And I was like, yeah, I am. So fucking lock in. And you were like, all right, I will. And I was like, all right, we'll see. And now here we are.
Uh,
So it's good to see it, bro. Pat yourself on the fucking back.
Yo, I'm gonna add the scalpers order flow at some point this year. I feel like that's next to add to my arsenal. of tools to TA because I feel
100%.
you guys crush it with the order flow.
Yeah, man, it unlocks an extra level of clarity. I think what I like the about the order flow the most, because I don't really use the order flow for entry criteria. I actually more so use the order flow for exit criteria. I like it because it tells me if I'm in like a buy position, for example, like all my buy positions today, I was able to take profit. I'll go over them here in a second. I was able to close my trades in full because I was able to see where buyers were getting trapped in the markets. So that's what I really like it for, is it allows you to kind of give you the confidence to hold the trade or get out of the trade because it tells you where volume is trapped or located at in the markets. Um, but yeah, bro, good stuff nonetheless. All right, so let's roll over. A little bit of motivation for you guys in the rising just to again show you all. And we'll have some other up and coming trading mentors. Like I'm sure that once Max gets there and he's fully profitable, he'll be on board, probably teaching some order flow stuff with Scalper's channel and whatnot. And then there's a couple lot of you guys as well that are profitable that, if you ever want to jump on the DeFi voice channels or the Discord voice channels and start breaking down your trades during the week, you guys are always more than welcome to. That's what those are there for, right? So all right, moving on. Let's continue down this rabbit hole and break down kind of what we've been paying attention to this week. How I was able to take trades today based off of some of the information that I've been sharing with you guys all week. Again, just showing you all the level of accuracy that we operate with here in this community. So first, timestamps are important to us. Let's go back to January 4th to show what is now unfolding in the reflection in the market sentiment. So on January 4th, this is our Sunday report. As always, Sunday, Monday, we discuss and put out a full report for the week ahead, going over risk on, risk off scenarios. And the risk off backdrop this week, we had discussed any labor or economic data that comes in stronger than expected that pushes back on rate cut expectations, any Fed speakers that reinforce a hawkish or restrictive stance, any rate cut probabilities falling meaningfully, geopolitical tensions escalating or tariff uncertainty intensifying, yen carry trades unwinding or Japanese finance ministers intervening with the currency, so on and so forth. And we mentioned under those conditions, the dollar and safe haven assets would likely strengthen. You can see that right here. And we said risk appetite would likely fade and crypto would likely struggle to sustain current support levels. All right. Now, if we fast forward to today and we look at the retail spectrum, this is now 4 days later. The headlines are literally mirroring what we discussed and talked about days in advance. So, just real fast, it says here stronger US data curbs Fed easing bets, supporting the US dollar and pressuring G10 currencies. And so, no need to even break this down any further. We know that the data this week has not substantially supported the odds of increased probabilities of rate cuts in January at the 27th to 28th meeting and in March. So, with that in mind, we're seeing that reflected in risk prices. Okay. So, here you can see the total cryptocurrency market cap. We did see some sell pressure at that $3.2 trillion threshold. We're down currently on the day, only about 21 billion. Nonetheless, we're still seeing some sell pressure. Every single time this week that we've seen a pump in prices, we've seen sellers take control, trap buyers, and become aggressive enough to push price back down to the lows. I'm not saying that the rally that we saw from the weekend into this week is over. I still have a firm belief on the higher time frame as long as we remain above this support or this buy base, we still have some potential upside to go, considering as well that we're also trading above the triple moving average on the 8 hour. However, we need to see tomorrow's labor market data support rate cuts or at least not deteriorate the odds of rate cuts in 2026, leaving the door open for at least two rate cuts this year, which is what the market's still currently holding on to. And if we can see that, coupled with no fear, uncertainty, and doubt tomorrow, remember, we're supposed to get the vote or some type of update around Trump's tariffs. As long as that doesn't come out uncertain, then maybe we can see some type of formulated catalyst to support risk on sentiment heading into the weekend, and we can see a recovery from this week's downfall. If not, and we get the opposite of that, we see stronger than expected labor market data or higher than expected inflation expectations, anything along the lines of pushing back rate cuts or any market uncertainty that drives demand for safe haven assets, then we're likely to see this sideways price action or sell pressure continue. All right, so just keep that in mind. We'll go over that backdrop here in just a second. Okay. So First off, fundamentals. Okay, so why and how was I able to take this sell trade today? Well, I'll break that down just in terms of the fundamental backdrop, what came out at 7:30 this morning, because again, mind you, the fundamental data, the unemployment claims came out at 7:30. So here in this candlestick, we can kind of see that manipulation. I'll go over that. Then I'll also go over why I was taking these three buy positions and how I was able to come out on top today during New York session. First, taking a look at the fundamentals. You can see 4 minutes after the data, I analyzed the data for you guys and wrote my own personal bias and opinion on how the data came out, which I told you guys as always I do. So hopefully you all were paying attention because this gave the pretty much trade synopsis for today. I said here, taking together this set of labor data leans more towards resilience than broad-based weakening, which push back against near-term rate cut expectations and supports the Fed's higher for longer wait and see stance, which we know usually tends to create a backdrop for risk off. While headline challenger job cuts fell sharply in December to their lowest level since mid 2024, a short term positive signal, the broader labor picture remains firm. Initial jobless claims came in at 208,000 and are still historically low. Remember, in yesterday's Zoom call, I told you guys anything under 221,000 still supports labor market resilience, suggesting layoffs remain contained. Continuing claims also ticked up slightly, but not enough to signal meaningful labor market stress. Productivity growth surprised to the upside at 4.9%, while unit labor costs fell, indicating businesses are getting more output without accelerating wage pressure, a sign of efficiency rather than contraction. Even trade data indirectly supported labor stability, with stronger exports pointing to continued demand. Give me a second. Hearing some background noise here. Next paragraph says, that said, the longer term trend shows selective cooling, not a collapse. The total job cuts for 2025 were elevated, driving largely by government and tech restructuring, and planning hiring fell to its lowest level since 2010, a warning sign that momentum could slow ahead. However, this cooling is not yet severe enough to force the Fed's hand. For policymakers, this mix of low layoffs, solid productivity, and contained labor costs argues against rushing rate cuts in January. And depending on how the data comes out tomorrow, will likely push back on rate cuts in March as well, unless the inflation data, tomorrow's inflation expectations, and the labor market data comes out showing otherwise. So instead, the labor data so far this week has kept the Fed comfortable holding rates higher for a prolonged period of time while waiting for clearer, sustained evidence that labor market is softening, not just isolated improvements. All right. And so with that in mind today, when the data came out, coupled with the technical analysis that I'm going to show you guys, I was able to determine that the market was going to sell off today. We'll go over that here in just a second. Now, moving on a little bit further, I want to show you guys why it's so important not to just screenshot the headlines and then just go off what the headlines on Forex Factory or FX Street or Trading Economics are saying. I'm not too entirely sure who the fuck these analysts are that are writing these headlines, but they're low key, in my personal opinion, doing it on purpose to manipulate the masses or the retail investors that don't actually click open the data and read it. Because if you click open the data and you read it, headlines like this can be super distracting from what's actually taking place. So you can see here in this headline, just to give you an example, U.S. labor market expectations deteriorate as job finding expectations reach series lows. Reading that initially, one would think, oh shit, labor market strength is weakening, rate cuts are on the forefront, they're happening, jobs are deteriorating. Oh my gosh, we're bullish in risk assets, right? At least that's how I would see it if I was an uninformed retail investor just reading this headline, right? Now, if we actually take a look at this report, January 8th, 2026, and you can see that headline right there, I went through and I highlighted things that were hawkish or would push back on rate cut expectations. And so you guys know I like red, that's something that pushes back on rate cuts, yellow being something neutral, and green something that supports rate cuts. Well, after I highlighted four things in this report alone, there's so many more, but four things that would push back on rate cuts, I immediately knew that this headline right here was a complete distraction. Okay. And so breaking this down using ChatGPT, just so that way you guys can see, this gets a little bit thorough, but pretty much I copied this entire thing and I talk about Ask ChatGPT to explain in detail how the things in this report are actually contradictory to what the headline says. You can see here says, look at this headline. Wouldn't this headline have people thinking that rate cuts would happen urgently? But under the hood, the actual data says otherwise. Explain. So it says here, why the headline is misleading at first glance. Labor market expectations deteriorate as job finding expectations reach a series low. Naturally makes people think that labor market is breaking, recession risks are rising fast, and that the Fed must step in quickly with rate cuts. But the Fed does not cut rates based on expectations alone, especially consumer expectations. It cuts based on realized weakness, inflation trends, and financial conditions. So, what the data actually says beneath the headline. Let's scroll up here because it goes into detail on all the hawkish things that this report actually says. So, it says median inflation expectations increased by 0.2% to 3.4% at the year on year head horizon in December. So, right there alone, anytime we see inflation increasing, pushes back on rate cut expectations. They were unchanged at a 3 year and 5 year head horizon. Median inflation uncertainty, there's another word right there, or uncertainty expressed regarding future inflation outcomes increased in all horizons. That sentence alone right there should have painted a risk off backdrop if you were to read this report. Why? Because we know that anytime we see that word uncertainty in fundamentals, usually tends to result itself in a risk off backdrop in a favoring environment for safe haven assets. I've told you guys that many, many times. You don't even need to read the rest of the report at that point. As we come down here, it says, rising short-term inflation expectations and greater uncertainty directly challenge the Fed's confidence that inflation is sustainably moving towards 2%. Another headline says, or another part of the report says, median home price growth expectations remain unchanged at 3.0% for the seventh consecutive month. This matters because housing inflation remains persistent, which is a key reason that the Fed will stay cautious. It also says the median expected growth in household income increased by 0.1% to 3.0% in December. The series has been moving in a range between 4.7 and 5.0% since May. Why this matters, it says income and spending expectations still remain elevated, signaling that demand is cooling only gradually, which is not excessive, which then forces the Fed to cut aggressively. Here it also says, this is very important, mean unemployment expectations decreased by 0.3% to 41.8%. This matters because falling unemployment expectations and steady earnings growth reduce the urgency for easing. So I could continue to go on and on and on, but nonetheless, I'm just trying to show you guys how if you were to just read the headline and not actually pick apart the data itself and read thoroughly through it, you would have assumed that MNQ or the total cryptocurrency market today was likely to rally based off what the headlines say. But that is the farthest thing from the truth. All right. So if you pay attention to what we talk about in our reports, you now see it unfolding in real time in the caught up retail reports that are coming out now as of today. And if you guys go off of what I try to teach you all, is that to actually open the reports and read them and pay attention to key figures and vocabulary. Like if you see things like increased inflation, that's a risk off terminology. If you see things like lower or a decline in unemployment, that shows strength in the labor market or some type of resilience in the labor market. That is not good for risk assets and for rate cut bets. If you see words like uncertainty, right? All these key vocabulary words I've taught you guys over the past 2 years that we've been doing these fundamental reports, it's very clear what sentiment was set to unfold today. All right. So that was my fundamental backdrop for today and why I was taking aggressive sells at the very onset of New York session today. So now that you guys have that in the back of your minds, now let's break down why I was taking these trades with technical analysis. All right. So New York session opened. Sorry, let's go back just a little bit further. This is the New York session open. Let's go back a little bit before that. So here is where the data came out. Okay. And so again, remember I told you guys that the data headlines would lead people to believe that the market was going to go higher or that risk assets were going to perform well today, right? And so you can almost see that reflected in the technical analysis. Right when the data came out at 7:30, you see the market makers throw up aggressive buy volume. But what was this buy volume, realistically speaking, going to do? It was here to trap buyers at highs, grab all the liquidity from the early sellers that existed before the news here, and then we see a very sharp reversal. Now, this sharp reversal here, what you'll notice is that it breaks the last two structural points. So this to me at the news and then understanding the news, mind you, I digested all this news about 4 minutes after it came out. I was looking at this as a fake out or a buy the rumor and sell the news event. So people were buying before the news and then actually selling when the news came out. So here you can see this in terms of technical analysis. After the news came out, we have a nice bullish spike, but then it starts to break structural lows. This support here was broken. This support here was broken, and the market made a new A to B move. So seeing that, understanding the fundamental backdrop and understanding now that we're most likely to see sell pressure in risk assets, particularly MNQ being a risk asset class, as we continue to progress to the onset of the open of the New York session, I noticed a sell delta held pattern. And so here you can see after the sweep of liquidity, shift the momentum, we continue to trail sideways. But then I noticed that the market makers were yet again setting up another trap. And so sure enough, we see a move above the highs, a shift beneath a previous support. So you can see after this high was liquidated by this one here, the support that created this A to B move was broken right before the New York session opened. So I could see the intent for market makers. And then right when the New York session opened, I had taken my fib and I was thinking to myself, okay, where could New York session sell off from? Well, during the open, they're not going to sell from a discount, which is where price was. They're going to push it up into a premium or a high where they were previously selling. So I was looking at these two highs as an area of premium or discount where they could sell from. So I was taking my fib from the high down to the low, and I was simply just waiting for price to come up into a 70% retracement. Sure enough, right when the New York session opened, price wicked up into that 70% threshold, and then we see a huge, massive bearish candlestick. Buyers got trapped, sellers became aggressive, and my overall analysis of a risk-off sentiment had come into fruition. Now, another thing that you'll notice, pay attention very closely, prior to the New York session open, what do you guys notice about the triple moving averages? Can somebody tell me? What did the triple moving average act as up
Yeah,
into the New York
that's
session open?
a support.
Yeah, good job, right? It was acting as a support, right? Then right here,
It
right
crossed.
before the session opened, you can see a triple moving average crossover. I have that identified here with this arrow. We have a triple moving average crossover, and then the triple moving averages started acting as a resistance, right? And so that was another added confluence today on top of my sell delta held pattern that I was seeing. So the wick taking out these highs, shifting momentum and breaking previous support. On top of that, we had a triple moving average crossover, TMAs going from support now acting as a resistance. All that was left for me to do was take a fib from the high down to the low and wait for price to come back up into a premium or a discount. Sure enough, that was how I scalped this first position. All right, so moving on, where did I sell this first position at or take profit? If we zoom out, and how was I able to catch these buys? Okay, zooming out. So just like Aqua had mentioned, if we go back in time just a few sessions, you don't need to go too far. Remember, I try to tell you guys a couple of sessions back, no more than two or three, right? So if we go back to a previous New York session here, I was highlighting from the candlestick bodies down to the wick on the 15-minute time frame. 2 sessions ago where New York session was buying from. And that was my first designated area of interest where today, if New York session was going to buy, considering that the market sentiment at the onset of the session was risk off, they were likely to buy from. So I highlighted again on the 15-minute from the wicks up to the bodies and extended that over to the right-hand side. Excuse me. My second area of interest, same thing, was just London session lows. Same thing. I just highlighted from the candlestick bodies down to the wick and extended that over to the right hand side as my second area of interest, as where buyers could start to defend their prices at where they bought from before. And so where I took initial profit on this sell position was right when we came down into the New York session area of interest. I think I had 12 contracts running and I closed 10 and left 2 on the table. Then right here, we'll jump down to the 1 minute time frame where I took my first buy. I fully closed out my sell position and I realized that market makers were respecting the London session lows. They were liquidating where they previously bought from during New York and pushing price down into the London session lows before buyers became passive enough to defend, absorb sellers, and then become aggressive to reverse price. So now jumping down to the 1 minute, you can see how that played out. So here you can see, remember, I try to tell you guys, this is very important. When you have price coming down into an area of interest that you set. So again, think about it. Let me erase that so it doesn't confuse you guys. But look, so remember, this was my New York session area of interest. Okay. Once price came down into that New York session area of interest, there was somebody in the chat today that bought from this first area. And I took another sell position here and continued this momentum down. Can anybody try to tell me why they think that is? Just looking at the structure on the 1 minute. And again,
It
keeping
was
in
me.
mind, go ahead.
Okay. It was me. Yeah, I took that L, and so I then recognized what happened, which is then it came down and broke that structure, but then I saw the push up, and then I took that, and I was able to to make a little bit.
Okay, so the
Since I
question was
took that now.
the question was why was this not the buy that people should have been in?
It didn't
But
break the structure.
Good
it,
job, Kevin, right? So again, think about it like this. When you have price selling off aggressively and you have an area of discount defined for yourself as to where these market makers could buy from, whether that's you're using order flow and you have an imbalance highlighted, or you have the CYPRX 2.0 in the back of your mind and you've highlighted areas of discount where London, New York, or Asia were buying from. Okay, so think about it logically. These market makers know that people are going to try to catch a falling knife. They're going to try to trade and catch the bottom of price action. Okay. So as price is coming down into your area of interest, track the lower lows, lower highs, lower lows, lower highs. Okay. The last lower high that is created, or the last up candle followed by a down candle, one up, one down candle. I'd say on the 1 minute time frame, anything lower than that gets a little bit too fractal, needs to be broken before you buy. Okay? Needs, I repeat that again, needs to be broken before you buy. And so, sure enough, here you can see this wasn't the buy because when buyers made an attempt to step in, they did not have enough aggression to break this high. So this is a signal. If you were buying from this low, it's not incorrect because you can still take aggressive, risky bets here because we don't know at this moment in time if the market's going to do this. So it was still a good buying opportunity, but you need to have the discipline to say, oh shit, this high was not broken. Let me move my stops to break even or close the trade with partials or close the trade in full because the high was not violated. Right. So after that, sellers continued to trap buyers. And this was that New York session low. They came, they swept the low. Once I noticed that, I noticed here on the fractal time frames, I don't have the 30 seconds chart on trading view, but after that, here you can see we have a fractal break-in structure. So if we look at this candlestick, it's very hard to see on the 1 minute. On the second chart, you'd be able to see it. But same thing. As price came down into these lows, here's a lower high, lower low, lower high, lower low. And then right here, this down candle, you can see the top of this wick, okay? This down candle comes and then wicks above this high. So I saw that on the seconds chart, which is a break of microstructure. And then following that, we have a bullish candle or one down candle followed by an up candle. That gave me the green light to say, okay, buyers are making an attempt to defend at where they bought from during a London session. So I bought, stop loss nice and tight beneath the candlestick wick, and that was my first buy position, right? So like I told you guys how I use order flow, how I was able to get out of this trade is I was paying attention to all the aggressive sellers that existed over here in this area. And I noticed on the order flow that buyers were unable once, twice, and three times to break above the resistance or the aggressive sellers that existed in this area, and that sellers were defending, passively trapping buyers. And so I was able to take partials on this first position. Second buy position, all I was doing was I was simply looking at this low to the high and getting in on this pullback. We had a 62% retracement. Same thing, one down, one up candle at a 62% retracement. That gave me the green light to take a little buy position. I scalped this one as well and then took profit on the same parameters. We had sellers that existed in this area that were passively trapping buyers. Buyers were getting trapped at highs. They made an attempt 1, 2, 3, 4 times and failed to break the resistance. That for me was a clear signal that sellers were still in control. So I took profit on that trade. Then same thing again. I made another attempt to buy. I was like, okay, this is going to be an internal liquidity sweep. They're going to come, sweep the lows, and then rally price. I did the same thing, took a fib from the low to the high. This trade came in at 70% discount. This one I entered in with a buy stop instead of a market execution. I had a buy stop right above this bullish candlestick. This bullish candle entered me in. Stop loss nice and tight beneath the wick. And then same thing, I took profit under the presumption that, yet again, buyers were unable to make an aggressive attempt to break the resistance 1, 2, 3 times. We started to see a pullback. I closed this trade, boom, done for the day, right? So very simplistic, nothing overly extensive, easy CYPRX confluences, understanding fundamentals, compact with technical analysis, in my personal opinion, is the best way to go. And then obviously, of course, layer on discipline and sound risk management, right? But outside of that, the directional bias for the day was, in my personal opinion, easy to see as long as you understood that the fundamentals did not support a risk on backdrop. At the beginning of the session as well, you had a sell delta held pattern or a continuational break of lower lows and lower highs or previous supports, right? On top of that, the triple moving average crossover just solidified things. I've told you guys so many times that this can either act as a resistance or a support. Don't trade against that. Trade with that order flow. If you see the triple moving average rolling over on top of price action, acting as a resistance, prior to that, you see break of market structures, liquidation wicks to the upside and shifts to the downside, then most likely market makers are going to target lower levels. All right. So very simplistic breakdown today. I will finish it up real fast with my analysis and maybe let Kev talk or anybody else that wants to break down their trades and maybe how they were on the right or wrong side of the market today have the floor. But real fast, just taking a look at tomorrow. Okay. Tomorrow we have average hourly earnings, non-farm employment change, the unemployment rate, all on our key focus for the scheduled data. Then later on in the session at 9 a.m., we have the consumer sentiment and inflation expectations, followed by late into the session Fed speakers. Excuse me. Now, just because the sentiment today was risk off does not mean that that could completely change and flip on its head tomorrow. If tomorrow we see cooling in the labor market, or at least labor market data that still keeps the door open for rate cuts, coupled with Fed speakers, usually Kashkari is net hawkish. He has been hawkish, collectively speaking, over the past consecutive couple of times he's spoken. Barkin has also been hawkish over the past couple of times that he's spoken as well. So if we can see the market hold on to the rate cut narrative after tomorrow's labor market data, where even if it does come out resilient, it doesn't completely obliterate and push back on the rate cut narrative, then we could see a recovery in risk sentiment. Okay. Be mindful of a scenario where I told you guys, if we do see a huge deterioration in the labor market data tomorrow, that could spark recessionary fears, which could drive more demand temporarily for safe haven assets until the Fed steps in and eases. And then inverse to that, if we see a complete blowout of the non-farm employment change and way healthier labor market figures and the unemployment rate, meaning, let's say, for example, let's say tomorrow non-farm employment change comes out at, I don't know, 75,000 jobs added or 100,000 jobs added compared to the previous, and the expected reading of 66 to 64,000, and the unemployment rate drops to 4.4%, right? That would be super strong or stronger than expected labor market data and would weigh on the rate cut expectations. We'd probably see the dollar have a nice liquidity spike to the upside before cooling off. All the other G10 currencies paired against the dollar would likely see sell pressure, and we'd probably see a nice bearish leg in crypto. Inverse to that, any scenario that keeps the door open for rate cuts could keep crypto supported. And then the inflation expectations and consumer sentiment. Usually, we'd like to see an upbeat consumer sentiment, which shows that people are spending, they're happy about the economy, and they're not worried about a recession. That is expected tomorrow to come out slightly higher than previous reading. Anything above the 50 grade threshold could support a risk on sentiment. And then inflation expectations. Inflation expectations, obviously, of course, we'd ideally like to see those come out below previous readings. All right. We also, keep in mind, are still on our toes about the up and coming announcements around Trump's tariffs and Congress's decision and any uncertainty that could stem from that as we head into the weekend. And then to further our course into the weekend, just be mindful that that is usually when geopolitical tensions tend to flare up in headlines around Russia, Ukraine, Taiwan, China, Japan, the Middle East, Venezuela, all become of key importance. And we'll be paying very close attention to any of those things. All right. So that is it for today. I'll leave the floor open for any questions or trade breakdowns you guys might want to go over. I have a couple of minutes left to give you guys, but I hope that you all enjoyed seeing that from pretty much the beginning of the week. We have been talking about the sentiment that unfolded today, how I was able to analyze that both off of the fundamental backdrop and the technical analysis combined. So yeah, hopefully you guys keep continuing to pay attention and kill it.